Hello, this is Michael, stock analyst with Long Wealth Capital. Today is September 23rd, 2025. The SPY closed at 663.21. And today we are looking at Cal-Maine Foods Incorporated, ticker symbol CALM, CALM. So CALM is a cage-free egg producer in multiple states. And recently it has dropped below the 200-day moving average here at about 100. And it has, as you can see from the Fibonacci retracement from 79.55 to 120.4 high, it's in the golden retracement at 61.8%, is at 97.45. Today, CALM closed at 96.85, just under the Fibonacci retracement level of 61.8%, the golden retracement area, and significantly below the 200-day moving average. So a couple of things to highlight with CALM is it is over 185% discount to the intrinsic value. And they are going to have their first ever earnings call before the market opens next Wednesday morning, October 1st. Another thing to highlight is that they are a debt-free company. They have a variable dividend that this recent year has paid around 9.5% dividend. And so I am recommending, all of that is likely going to cause some price volatility, both with their first earnings call ever, them announcing what their next variable dividend will be. I suspect, along with anything in the markets also, I suspect could create some market volatility in their stock price over the next 2 to 3 weeks. So I'm actually recommending a aggressive escalating tranche level percentage. So I'm recommending, instead of the normal buy some as it goes down, if it goes down, I'm recommending a small percentage to start with and escalating that percentage as the levels go down, so that it will aggressively reduce our average price per share, our average dollar cost average, if it goes down, just as an extra layer of protection, as you can see here from the chart. So let's just look at those levels. So it closed just under $97 today at 96.85. There is an area of support at 97, and I use the historical volume price chart to look at these different levels. There's an area of support just below 94, just below 91.35, 88.4, and 83.4. And on the attached file, you'll see that. Another thing is, just today and in the last couple of days, there's been a significant level of dark pool, high aggressive bullish trades today and in the last couple of days. So there's institutional money flowing into this stock as it has dropped recently. The target exit is going to be up at 100 and or around that 200-day moving average. So obviously, if the stock continues to drop, that 200-day moving average will decrease. And so as we average in, if it bounces right away, my recommended exit would be at 100. If it does drop and we dollar cost average in, I would, on the daily chart, I would highlight the 200-day moving average as a good strategy for an exit point. But once again, just a reminder that they have their first earnings call ever next next Wednesday, October 1st, before the market opens. And probably around that time, they'll be announcing what their next dividend payment will be. So either of those events could cause some volatility in the stock price. Thank you very much.